Let's take a look at that fixed income market. The equity market, as we can see, continues to be under some selling pressure. Has this meant that we've seen an uptick in activity and appetite for fixed income assets?
Yeah, well, like you said, the equity markets maintain a bit of a bearish tone. Overall, looking at the activities and in terms of the gainers and you look at losers, actually showed a kind of lackluster trade activity. We think the bearish tone actually running its focus for the time being. But however, we've seen a lot of uptick in the fixed income side. We've seen yield moved on both directions across the tenor. But overall, we think people are actually positioning themselves in the fixed income market more than on the equity side of things, and as such, it might be the reason why you're seeing that shift in the market now. But overall, in terms of asset classes, I think the fixed income market posed some attractive yields for the investors rather than the equities for the time being.
We did see yields ticking up at the end of last week, though, with bond prices declining. The market said to be pricing in another 50 basis point rate hike, with the central bank looking to contain inflation within that 10% annual target range. How have yields been performing today?
Overall, I mean, we're seeing, like I said, we're seeing some movement in the prices. I think we're seeing some of the tenors in the fixed income market actually losing some price, closing lower than the opened. I think now that we approach the MPC meeting and awaiting the statement from the meeting, I think a lot of people will stay on the sideline or playing an optic or a downtick wherever the opportunity presents. But most people really looking over the period, over the horizon, would actually stay on the sideline until we get good feelers from what the outcome of the MPC minutes will be.
Now, Nigeria plans to sell its next round of monthly sovereign bonds on July the 20th, 70 billion rand worth of 3-year bonds maturing in 2014, 15 billion naira rather, worth of 5-year bonds maturing in 2015, and 25 billion worth of maturing in 2018. What kind of appetite do you see coming in for these bonds?
Well, I mean, I would say the first issuance of the Eurobond was deemed to be largely successful. We expect the same kind of appetite and the same kind of investors' interest in the bonds would come in. Not forgetting the fact that a lot of the factors that we had prior to at the first issuance have been largely been cleared. Which before at the first issuance we actually had a bit of political cloud wavering on the horizon. That has been largely cleared. We see earnings in the oil actually stabilizing above the budget range. I think these are positive outcomes of the economy, or positive outcomes in what's happening now that would actually tend to push investors' appetite into these issuances. Largely overall, I think if we've not had a successful first tranche, I'm not sure we'd had the confidence or the willingness to go into the second tranche. But so overall, I think you get some good, healthy interest coming in on these issuances.